Hey everybody, welcome back to another Buzzsaw Tax Tip Tuesday powered by Duckett Ladd Dental CPAs and Advisors. Jared Duckett back at you with my business partner Buzzsaw. Buzzsaw, what's happening, my friend?
Hey, Jared, how you doing?
Good, man. We got some people on YouTube and out there wondering where you got the Buzzsaw name from, so we'll keep that a secret. Maybe release that here in the future. But anyway, I'm doing great, man. I'm ready to dive in here, kind of to the series we've been doing. So again, this is the fourth part of an amazing 5-part series on vehicle deductions in your business. And I'll just stop you there. This is number 4. So if you haven't watched the first 3, go back. They kind of sequential, they kind of build on each other. But this is number 4. Again, click the subscribe button, hit the little notification bell so you can get these sent to your phone. But what we're going to talk about, Buzzsaw, if you remember, is really the depreciation deduction of the vehicle. We kind of just backing ourselves up, talked about who's eligible for the vehicle deduction in a business. And then kind of the 2 methods. You got the standard method, the actual method. And then last week, the 3rd episode, we went into the actual method, what expenses, are included in that actual method. And one of those expenses included in the actual method is depreciation.
That's right.
So we thought, hey, it's kind of deep, and it'll get a little deep here. We'll try to stay high level, but this separate episode here is specifically depreciation and how that works in the actual method and kind of how the calculations, but really just what you guys need to think about when you're purchasing a car, et cetera, for business use and how the depreciation is going to work on that vehicle. So Buzz, I'll throw it to you, man. Let's just start unpacking this briefly. Let's dive in specifically depreciation on a vehicle, kind of how's it work and all that good stuff.
Yeah. So depreciation is one of those big benefits that Jared mentioned as part of using the actual method. And, there's kind of first off the bat, 2 ways you could bring a vehicle into your business. One is you could convert a vehicle from personal use that you already own into business use. And number 2 is you could be purchasing a vehicle after you've already started your business. And so that's kind of the first thing to look at is, are you bringing a business or are you bringing a vehicle into your business, or are you purchasing a vehicle? And there's different ways in determining the basis for depreciation based on purchasing or if you already had your car in the past. So if you already owned a car and you're bringing it into your business, your basis for depreciation is going to be the current fair market value of that vehicle or your adjusted basis in that vehicle, whichever is less. And then, of course, if you're purchasing a vehicle, your basis for depreciation is going to be what you purchased the vehicle for, plus any other fees like sales taxes and things like that.
Okay. So really that happens all the time, where you've got an existing vehicle, maybe you've started a business and you're going to utilize that vehicle in your business. So again, get with your CPA to figure out what's your adjusted basis, what you can depreciate on those 2. Maybe you rolled it in, or maybe you just went out and bought one this year. So that's kind of the first starting point. What's next, Buzzsaw? I mean, once you kind of get that car in there, what are you looking at next and how that works?
Yeah, so staying on point, you got to keep your mileage, right? You got to know how much you're driving that vehicle for personal use versus business use. And so the big test for depreciation is, are you driving it for greater than 50% of the time business use, or 50% or less business use? If you're driving it for business use more than 50% of the time, there's benefits and accelerated depreciation, bonus depreciation that you can take. If you're driving it less than 50% of the time for business use, that's going to limit the depreciation you can take to a straight line method over 5 years, which will still give you the depreciation benefit, just more spread out over time instead of a big chunk in that first year.
Yeah. So I guess it's fairly safe to say, since you just said that, it's more advantageous if you are driving that vehicle more in your business use is greater than 50%. It's more advantageous that way, especially in the first year, right?
Exactly. You can take a big chunk of the basis in your vehicle as depreciation that first year if you're driving it more than 50% of the time for business use.
Right on. So, okay, 50% or less, straight line depreciation, normal depreciation. We won't bore you guys with methods here on depreciation, but a little less tax advantage there. Greater than 50%, how does it kind of work there? Like how much of that vehicle is depreciated?
Yeah, so let's say you're driving your vehicle 60% of the time for business use and you paid $20,000 for it. So you're going to take that 20,000 times 60% business use. Your basis for depreciation is going to be $12,000. And then based on, if you're going to take 179 or bonus depreciation, you may be able to deduct most of that as depreciation in the first year.
Yeah, you're exactly right. And we'll kind of stop it right there. Your example's spot on. 20K vehicle, 60% business use. You got 12K there that you can deduct. All right. And so there, I would recommend get with your CPA to say, hey, this is where we're at. This is what I bought. And they can kind of run those deductions on what you're going to get. But you could with section 179. Again, I think this is right, Buzzsaw. That's only eligible if it's greater than 50%, right?
That's right.
Okay. Yeah. So get with your CPA to see, because there's limits there. We're not going to get into the weeds here. There's limits, but get in and see, exactly how much you're going to, get eligible for to write off possibly all of it in the first year, which is huge. And let's tangent just a little bit, because I get this question all the time. You got this heavy SUV rule, and I hear it all the time. Like, hey, I got to go buy an SUV. And somebody said I get to write it all off if I buy an SUV. What is the heavy SUV rule? How does this kind of play into the depreciation too?
Yeah, so if your vehicle weighs more than 6,000 pounds, and that's kind of the information, the key piece of information there is that 6,000 pound gross weight. There's actually more benefits and more, it opens up the depreciation to more bonus, more 179. There's just a lot of those accelerated depreciation benefits that you can get if you purchase a vehicle weighing 6,000 pounds or more.
Yeah. And the funny thing is you'd be surprised. I don't go on the car lots too often, but you'd be surprised at actually which vehicles qualify for that 6,000 pounds gross vehicle weight rating. And it's right there on the inside of the door. If you ever looked at your car, go look at it. It's right on the inside of the door. But you've got some of these SUVs that are, you say normal SUVs out on the road that are 6,000 pounds or more, that kind of surprise you. Does that make sense?
Yeah, I would definitely check with your dealer, and it's something to factor in if you're looking to purchase a vehicle.
Yeah, because I'll just go back to your example in that heavy SUV rule. Let's say you purchased a $20,000 SUV, 60% business use. So your basis is 12,000. You're going to be able to write all that $12,000 off if it's a 6,000 pound or more.
Yeah, the first year limits are increased if you have that 6,000 rating in effect.
Yeah. So again, I guess, we could go into the weeds on this all day, and we'd bore you guys, to be honest with you. We would bore you on how depreciation, all that stuff. That's not the objective. What we want to try to give you guys, and Buzz, I'll let you leave them with a key takeaway is what to be thinking about when you're looking at purchasing a vehicle or starting a new business and rolling a vehicle in. So Buzz, I'll just kind of leave our viewers, what's kind of a key takeaway they can take from this video to use going forward.
Yeah, I think really the first thing is just think about how much you're going to be driving that vehicle for business use. If you think you're going to be greater than 50% of the time, then you really might want to look into, the 6,000 pound gross weight as a factor, because then you can take most of that in the first year as depreciation. So, at the end of the day, just kind of take into effect all these factors we've talked about, and then get with your accountants on what they think makes the most sense for your situation.
Yeah, you're exactly right. How much you're going to drive the percentage use if you need to look at, or if you want 6,000 pounds, because there's more advantages there and that sort of thing. But anyway, I think we're good, Buzzsaw. I think we've got a brief overview of what depreciation looks like. What we're going to do, okay, so next week, season finale, right? Next week, we're going to do a case study. Okay, we're going to go through purchasing a vehicle. It might be a little longer video, but we're going to go through a case study. Purchased a vehicle, and then go through, have depreciation projections to a degree, what actual looks like, what the standard mileage method looks like, and how to choose which one to get the most bang for your buck. That's what it's all about, right? How you get the most bang for your buck and get the biggest deduction you can get in your business. So Buzzsaw, man, I appreciate you as always.
Absolutely.
You guys out there have any questions on depreciation, direct them to Buzzsaw. He'll help you out. But for the most part, guys, stay tuned. And again, subscribe to this deal so you see episode 5 come out next week. That'll wrap up our 5-part series. But we got a lot of cool videos we're going to do going forward, and just little buzzsaw tax tips to share a little buzzsaw's brain on how you guys can save a little bit in taxes. So anyway, appreciate you as always. Have a great week. We'll talk to you guys soon. We'll see you.
Thanks, Jared.